How to trade the non-farm payrolls. Today I will talk about gold. I will talk also about the US dollar before the non-farm payrolls, non-farm employment change publication, before the US data dump. And this economic indicator is seen as a high impact event. Most likely the volatility will be high. It could bring sharp movements on the US dollar and on gold. So that's why I want to talk about gold here today. So risk disclaimer, please read it before I will take a look on gold, before I will talk about gold, before I will talk about the US dollar. And don't forget, guys, that you can access the link posted right below this video if you are not a VIP member. If you want to join us, or you can use this link from here, you can type it manually in your browser. You can send an email to support if you have questions. And don't forget that you can also, we need the economic calendar. And don't forget, guys, that that you can subscribe to our YouTube channel. Okay, it's very important for you to subscribe. You can learn a lot from our videos. Okay, so let's take a look first of all here in gold. Strong upside movement. Okay, so we have the price ignored and jumped above this downtrend line. Okay, so we have a new uptrend line right now, and after ignoring actually a false breakout here, its failure to stay below the downtrend line, its failure to make a new lower low, its failure to retest the uptrend line, signaled strong buyers, strong upside pressure. So technically the price of gold jumped above the downtrend line, signaling a potential further growth. Also it has jumped above this former high here, signaling strong sellers. So the bias from the technical point of view, the bias is bullish. Okay, the outlook is bullish, and after its amazing rally, maybe it could only retreat a little to retest 1782, 1780 static support levels, former resistance levels, before extending its growth. So technically the bias is bullish. Okay, let's take a look here, right, on the economic calendar. Also, don't forget that the Canadian data could bring high volatility and sharp movements. Employment rate, unemployment rate, which is expected to grow from 4.9 to 5.0%. Employment change, which could this indicator could be reported at 14,200, but the major event, the most important economic indicator, is presented by the non-farm employment change, which is expected at 250,000, yeah, and below 372,000 in the previous reporting period. Unemployment rate 3.6% in the US, average hourly earnings 0.3%. So fundamentally, guys, and also let's take a look on the dollar index before I will talk about the non-farm payrolls. So the dollar index, as you already know from my previous analysis, rebound. Okay, rebound in the short term, but in my opinion, the dollar index is still under pressure, is still under bearish pressure. It has failed here to stabilize. Let's draw again this downtrend line. So it has failed here once. It has failed to stabilize above the broken downtrend line. It has failed to stay above it. It has failed to stay above 106.40. And right now it has also dropped it below these former lows again, also below these former lows. So the dollar index is in a corrective phase. Okay, and in my opinion, yeah, even if we don't have a strong correlation, when maybe the dollar index drops, when we have a downtrend, a downside movement, maybe the price of gold could register an uptrend. Okay, so right now, before the non-farm payrolls, before the US data dump, the dollar index is still below this downtrend line. So the pressure is still high. Maybe the bias is still bearish in the short term. Okay, so maybe that's why also on gold we have an uptrend. Okay, so non-farm payrolls. If the non-farm employment change will come in worse than expected, okay, below this estimate, okay, if it or also but as I've said, this is the major event today, the non-farm payrolls, employment change. If the US data will come in worse than expected, if this indicator will be reported below expectations, far below expectations, then maybe the dollar index will drop deeper, will extend its sell-off, will approach and reach maybe the former low, and this scenario could maybe force the price of gold to jump higher towards new highs, okay? And in my opinion, only better than expected non-farm employment change far above expectations, forecasts, and also unemployment rate in line with expectations or better than expected, average hourly earnings in line with expectations or better than expected. So better than expected US data could force the dollar index to jump higher, and then could push the dollar index above the downtrend line. Maybe it would force the dollar index to approach and reach maybe the previous high, at least the previous high, and this scenario could force maybe the price of gold to drop. In my opinion, we don't have a strong negative correlation, but also after its strong rally, and it could still, guys, it could still invalidate its breakout above these levels if, of course, the dollar index will develop a strong upside movement, and if the US dollar will appreciate versus its rivals, okay? And if the dollar index will drop after the US data dump, if the US dollar will depreciate, then maybe the price of gold could resume its growth, because here after this amazing rally retreat, it could only retest these former resistance levels turn it into a support levels. So as long as it stays here above this area, these levels above the R1, a new higher high here, jumping, closing, and stabilizing above this former high could signal potential further growth. Thank you guys for watching this video, and don't forget that you have to be careful if you are not an experienced trader. These are seen as high impact events. Most likely the volatility will be high, and also the price of gold could register sharp movements in both directions. Yeah, so if you are not an experienced trader, maybe you should wait for the markets to calm down, to cool down, before we will take action on gold, on the US dollar. Thank you guys, see you next time, bye bye.